morning, traders. This is your host Nilotpal from your beloved Vidya Akshaya, and today we are going to discuss that how our markets are looking for the current week and also on an intraday basis. First of all, let's start with Bank Nifty. Now, whenever we want to analyze our markets, we always have to start from monthly time frame. Based on a monthly time frame, what we see is that the current bull run, which started at around March 2023, that bull run gave almost 19 to 20% move in markets, which is around uh, almost 7,500 to 8,000 points. Now, after hitting the high of at around 46,400, after hitting that high, our markets has been falling. Now, is this fall some kind of bearish market? Is this fall like is this something very bad for our markets? Absolutely not. This is a completely healthy retracement, and I'm going to tell you the exact reason why it is a healthy retracement. So this is a monthly time frame where we see that in every phase the market moves up, takes a retracement, again moves up, takes a retracement, again moves up, takes a retracement. Now when do we say that our markets are our markets are bear markets? It is when we cut the low of the previous retracement, which is somewhere around this. So if we would have fallen below 38,600 levels, then we could call this that okay, this downfall is a completely seller's market. And if we did fall below this, then we could see another almost more than 2,000 3,000 points fall. Okay, the targets are calculated like this. So around 4,000 5,000 points fall we could have seen. Now that did not happen. So how to check that this is exactly a retracement? The only thing which you need to check if it is a retracement or not, that is fib levels. We'll connect the previous two swings and see that where the markets have reversed. We can notice that the markets have clearly reversed from the zero point 0.5 levels. Markets went up, came down, took support on zero point 0.5 levels, and now it's reversing on a monthly time frame, meaning that this was a healthy retracement and the bull run is nowhere gone. We are still in a bull run market and we are going to stay like this for another 6 months or 1 year or maybe 1.5 years. We are still in a bull run. There is no sign of bearishness. Now, when will this bull run escalate very quickly? It is when we start sustaining above the previous monthly candle high, and that high is somewhere around 44,700. So 44,700 is your level. If we sustain above 44,700, then I'm taking Bank Nifty futures for the next 1 month. That is a trade which I'm telling you guys right now, because this trade will easily give us the first targets of around 1600 points, and above that we can also see 3000 points target based on the kind of price action form. Now let's see how our markets are performing on a daily time frame. On a daily time frame, Bank Nifty has tried to move up, not all by itself, but global factors have supported us. So for now, we can join a trend line here, which is supporting the markets currently on a daily time frame. And this is that trend line. We have seen constant support taken from this trend line. Market has taken constant support even on 13 November. So now this support is very important. If this support breaks, if this trend line support breaks, and then this level 43,535, if 43,535 breaks down, then we can see a big fall which will easily take us to 42,840 levels, which is not coming yet because we need to fall below 43,535 and sustain for a day on a daily basis. Now on a daily basis, let's see what we can analyze from the market, from the charts. Now on a daily basis, this is our charts. See, markets are not exactly bullish and not exactly bearish on a 1 hourly time frame. Currently the markets are range bound, and this is the broader range. The broader range is somewhat around here, which is around 43,940 on the higher side, and on the lower side 43,535. So currently there is no pattern. Markets are simply choppy and sideways. We are not getting that better move. So now let's see that what better moves can we get tomorrow on 15th November. On the higher side, your resistance level is 43,940, and on the lower side, your strong support level, which will actually impact very heavily if it's broken, then that level must be this level, because this level has two important supports. Let me show you. The two important supports are this, which was on 13 November morning 10:30 candle, and the second support is this, which was on 10 November evening 2:30 p.m. So these two are the very important supports for current markets, and these supports are around 43,700 levels, 43,695 or 43,700 levels. Below 43,700, we can easily see targets of 43,535. Now on the immediate level, what supports do we have? If we go to see immediately what supports do we have, our immediate support is this. This support is somewhere around 43,850. If we sustain below 43,850, then we can easily see a fall which will take us to 43,700 levels. This support is around 150 points, 150 points target, and then from 4700 we can see another bounce back. So if we open gap down, then we can see a bounce back from 43,700 levels. Okay, and if we open slightly gap down, then we can see the markets coming down, taking resistance from 43,850 levels and again coming down from 43,700, and then we'll see a buying. This is the projection on the base of a gap down. Now in case of a gap up, this is our projection. If we open gap up anywhere above the Muhura trading day high, which was around, let's say, which was around 44,050. 44,050 is a very strong level. Now if we gap up around 44,050 tomorrow, then we can see a very good trend which will easily take us to, on the higher side, the targets which we have are, let's see on the previous time frame chart. So on the higher side, our first targets above 44,050 is 44,000. Okay, 44,050 to 60 is a resistance zone. So this 10-point zone might act like a very strong resistance, because previously we saw a very good fall from this area. After we took resistance in this area, we can absolutely see here that we saw resistance from 44,050 60, and then we started a downfall which gave very big targets on the downside. So let's not ignore 44,060 levels. On the upside, 44,050 to 44,060 is our resistance level, and above that we can easily hit targets of 44,350 on intraday basis. This is the max target we can get on intraday basis. Let's see what targets do we have on the downside. On the downside, we know that if we sustain below 43,850, then we have targets for 43,700. If we don't get support from 43,700, then we can get supports from 43,535 easily. So these are our levels for Bank Nifty. Let's go and see what Nifty is telling us. See, on a monthly time frame, Nifty Nifty has not even shown a good fall. Nifty is simply making a flag and pole pattern, and that can clearly be seen. Just watch how big targets can we see in this pattern. This is the flag pattern, and this is the pole pattern, which is almost around 2,700 points. Now just imagine, once we break out this flag, how much targets can we get? We can easily get targets of 2,500 points. Now if I vaguely calculate the targets, vaguely, I'm not even telling you accurately, I'm telling vaguely, then also according to the length of the pole, we can easily reach 22,000. Okay, so that's going to be our targets for Nifty on a positional basis. Now above which level can we see these targets? Let's try to find out those levels. So one of the most important levels which has been, from which Nifty has been facing resistance, is 19,650. Long-term bullishness and strong long-term bullishness will come above 19,650. Mark my words. Okay. Until then we can show a sideways momentum, but very strong bullish momentum will be only seen above 19,650, which will easily give you positional. We can easily buy nifty futures in case we sustain above 19,650 with the daily bullish candle close. Now on the daily time frame, let's see what price action do we have. On a daily time frame, Nifty has been completely sideways. We have not been getting any kind of good moves. So let's see what good moves can we have and what's our important resistance level now. So one of our important resistance level is 19,560. 19,560. Above 19,560, we can easily see a 100 points target, which can 90 to 100 points target, which can take us around 19,650. On an intraday basis, on 15 minutes time frame, let's see what patterns do we have. So on intraday basis, nifty is completely sideways. There is no such big momentum. So one important level that we have is 19,415. Below 19,415 we can show a very good fall in nifty, and this fall can easily give us targets of, let's say, 19,375 very easily. Like there is no issues, there are no hurdles between in this target. Below 19,375 we can see targets of 19,330. Now we know that 19,300 to 330 is a very important support zone. From 19,330 we can expect a big bounce back in case of a gap down. In case of a gap up, our important level is previous day high, which is around 19,495. So let's take this range of 19,495 to 19,500 to 19,510, an important resistance zone, because markets have created a gap and this gap will definitely be respected. So if we come around this zone, take a small selling trade or ignore it if you can, which will give us a small retracement, and then we can expect a good move upside if we have a very bullish bias. Now 19,495 to 19,510 will act as a very important support zone if we open with a big gap up. So we can see a small selling, take support from here, and then if we break out 19,560, that will be our best case scenario of a very bullish one side trendy move. So this was nifty analysis. Now let's see what's mid cap nifty telling us. On a monthly time frame, mid-cap Nifty is at all-time high, very bullish momentum, but no trades. See, mid-cap Nifty saw selling for only 1 month. There is no such a big selling in mid-cap Nifty. Now we have crossed the high of that selling candle. So now automatically our bias should turn into bullish bias. Now on a daily time frame, what we see is that mid-cap Nifty has broken its all-time high, which was somewhere around 19,240. So again, if mid-cap Nifty sustains opens flat, take support from 19. No, the ATH is somewhere around 19,241. So if we sustain above 19,241, 19,241, 242 again, if you see, markets have been trying to defend these levels for 2 straight days. On Mora trading day, that was on 12 November, we saw a bearish candle form above the high, which was a negative sign. So on the basis of that negative sign, the next day we saw some selling, but buyers tried their best to hold the markets and they did hold the market. So for now, on an intraday basis, a very important level for us is the Murat day trading high, Murat trading day high, which is somewhere around 9,272.50. This is your very important support resistance area. Above this area, you will not see for targets. You will simply book. You will simply trail your positions. There is no booking. You will simply hit your SL or get out of the trade and take a loss. But there is no targets above this. We can see a very good trend if we open flat. If we open flat and stay range bound in this zone for a while and then break out, then we'll not see small targets. We'll play for big targets in mid cap nifty. On the downside, our very important support level is a bit below. It is around 9,201. On the downside, 9,201, 202 is a very important support zone. And on the higher side, 9,272 is a very strong resistance zone. Between this area, we can see a very good consolidation because markets are at 88 and it will not break this range so easily. Now, in case of a gap up, it's expect an immediate selling, and then from previous day lows, previous day closing, we can see a good bounce back. So we'll play along in mid cap nifty, whatever we see. Now, if we go for fin nifty, let's see what kind of trades we can get in fin nifty. If we watch FINNIFTY on a monthly time frame, FINNIFTY is currently very choppy. You don't see any kind of good moves. There is no good levels. Okay. Now price action is definitely bullish. See, this is the price action. Higher high, higher low, higher high, higher low, and now we saw a bounce back. But this bounce back will be prominent only and only when we sustain above this area, which is 19,825. 19,825 is your do or die level. If we sustain above 19,825 with a daily candle close, then you can go for positional calls in FinNifty, and your first target will be easily 20,375. These are big targets, and we will play for big points when FinNifty sustains above 19,825. Now on a daily time frame, what we have with these charts are that FinNifty has not exactly been giving a great move for the last 1, 2, 3, 4, 5, 6, 7, 8. See, we got one good move on Friday 10th November, and except for that, for the last 8 to 9 days, we did not give any good move, and we do not expect this good move because there is a very strong support resistance level on the higher side. Let me show you what that level is. That level is the Muhur trading day low and yesterday's high. This level is somewhat around 19,625 on the higher side. This is a zone 19,626 and 19,615. This 10 points zone might seem small, but this zone will act as a very strong resistance. Now, if we open flat, we can definitely see another bounce back from this zone. We can definitely see another small selling. And if we consolidate near about this high and then break out the important zone of 19,626, then we can see a good move where the Muhur trading day high will act as a small resistance but not a very big resistance. This can be broken down. This can be broken out very easily. In 15 minutes time frame, we have currently two setups. If we open flat, then we can show a bullish move till 19,615 to 19,626, and then from there we can book profits and wait for a while. After we show a bit of consolidation here, then again we can enter in calls once we sustain above 19,626 and take a retest. On the retest, we can buy, book our profits as Muhur trading days high, which was on 12th November high at around 19,677. Above 19,677, we'll take big targets, which are where we'll simply trail our calls, will not book very easily. On the lower side, one strong, very strong level is this level, which is around 19,495 or 19,500. Below 19,495, we can see easy targets of 19,400, 422, 422, 420, 420 levels, and below this we can see targets of around 19,350 or 19,360 levels. From 19,360, we'll see a definite bounce back because just see the level of buyers that have entered around 19,350, 360 levels. We have seen a very strong buying from these levels, which gave us at around almost 230 to 240 points move. So you can expect one small buying from 19,422 levels and another small buying from at around 19,360 levels. These are your levels on the downside, and this was analysis for daily and weekly charts for our Indian stock markets. Now we'll discuss about some stocks in our premium group. If you want to join our free group, your link is provided below. And the reason behind explaining in English is a lot of people who are with us, they don't understand Hindi, and so we have tried to make this affordable and make this understandable for everybody. So we'll try to also include our Hindi analysis, but we'll mix and match a bit of both. Now, if you liked our analysis, then please subscribe our channel. And if you want to learn about the Indian stock markets, about option trading, about anything and everything, then do consider joining our group. Our group is completely free. We provide completely free education. If you want some calls and puts and all, if you want to learn a little bit more than average, then you can join our premium group, which is 101 per month only. So thank you, and let's meet again on another analysis video.